Hello, this is Bryce Knorr, Senior Editor of Farm Futures Magazine. Welcome to The Buzz for Friday, June 21st, 2013. I'm in Ames, Iowa, where I spoke to the annual meeting of the West Central Co-op. There were a few empty seats, maybe not for dinner, however, because farmers are furiously taking advantage of drying conditions to get the last of their 2013 crops in the ground. Market analyst Paul Bergner joins me to go over the details of what to expect for next Friday's big USDA reports, which include the agency's updated estimates of how much farmers got in during this difficult season. For corn, we think USDA will report planted acres of 95.75 million, down 1.5 million from March intentions, a decline of 1.6%. Most producers appeared inclined to plant something rather than take a prevented planting payment, and corn provided the best profit on paper. Even with acres down, record production of 13.7 billion bushels or more is possible. That's why December futures struggled to break above the trading range capped by the $5.65 revenue protection base price. Old crop prices may depend on next week's other report, which June 1st grain stocks. Exports and ethanol usage are pretty well known, but these numbers tell us how much corn was fed during the spring. I'm projecting feeding of around 900 million bushels would take stocks down to just under 2.8 billion bushels. Paul, these grain stocks reports have produced some big market reactions the last few years. Which will be more surprising next week, and what does that mean for prices?
Bryce, the number that I'm very curious about is the feed number. We're hearing reports in the plains that wheat coming off of those combines is going into feedlots on a fairly regular basis. What we've got strong old crop prices, and we've got strong bases, making that corn a little bit expensive, and maybe a little demand rationing still going on with this tight old crop corn supply. Wouldn't surprise me at all if that stocks number is a little higher than we expect, and if that's the case, we will see a little softening in those old crop prices. Ethanol demand is still strong. Looks like the margins there are pretty good. That's keeping a lot of that corn up in the Midwest and creating a little bit more challenge for the export and the feed guys. I do expect December prices to be steady, maybe even a little bit up, depending upon how much corn we actually take out. I think 1.5 million maybe leaves us a little bit steady. A number bigger than that will be positive for December corn prices.
Soybeans have a reputation for volatility, in part because they seem to attract a lot of outside money. Sometimes that cash flow produces rallies, but this week selling ensued after a major meltdown across financial markets caused by the latest meeting of the Federal Reserve. Chairman Ben Bernanke said the central bank could begin cutting back its program of financial easing later this year, completely ending it by next summer if the economy continues to improve. Some of the $85 billion the Fed spends every month sloshes over into commodities, including soybeans. The other cause for volatility in beans comes from the difficulty traders have in predicting production and forecasting demand. That's certainly the case this year. A difficult spring means acreage could be up or down, and while late planting had less of an impact on beans, it could still cause problems down the road from weather forecasts suggesting potential for late heat in the western part of the production area. Our official estimate for next week's report keeps acreage unchanged at 77.1 million. Quarterly stocks are almost as tough to predict, in part because the USDA's accounting system has a fudge factor called residual usage that can vary widely. This year it could mean less beans were used in the quarter than in reality for seed to correct past errors. The result could mean June 1st inventory of 464 million bushels, the lowest since the 2003-2004 crop year. Paul, those tight stocks could create some real fireworks for July futures headed into delivery. But which way are November soybeans headed?
Really not expecting big moves in November beans unless the acres are down. Then I think we can see some strength in those prices. The other thing would be a big move up in planted acres. If we start to see that number jump out there, 78, 79 million, maybe then we start to soften that corn or soybean price a little. We'll see where that one goes. It really is a tough one to call. The big price upside, in my mind, may come later in the summer for soybeans. Let's see what this weather does to us. Those late planted beans start to give us some issues about some heat at flowering and some other issues down the road. I think there might be the place where the weather treats the farmers poorly and adds some strength back into these prices. I'm looking for the tight old crop supplies to add support all the way through the summer, and I think that will add some support even to the new crop prices as we start to see the export purchases really rolled out into the new crop.
This year's wet spring likely means less spring wheat and durum got planted than intended on the northern plains. Overall wheat acres could be off 640,000 or 1.1% as a result. June 1st stocks look like they could be around 743 million bushels, only 3 million less than USDA's last prediction. But again, usage is hard to predict because residual usage is often negative in these reports to correct past mistakes. Neither report may stir much interest because the market is focused on new crop demand. Export sales are off to a decent start, but there's still a great deal of uncertainty over wool production. The size of the crop looks more than adequate, but there are concerns that bad weather in the northern hemisphere means that more of that production won't grade as milling quality. Combines are finally starting to roll in Kansas and the weather looks dry for harvest. Paul, you're out in wheat country. Do you think the markets can hold their lows? And what's the upside potential for wheat?
I do think quality might be an issue for the wheat crop. What we're hearing is good protein numbers, as we typically hear with a short crop. But we're starting to hear some lighter test weights. I think some of the heat, some of the stress that this crop has gone through has created some issues with test weights, and that might be part of the reason that this wheat is finding its way into feedlots at maybe even a little bit of a discount. But I do think that is something that we need to be aware of going forward. The feeders are actively buying at the current prices, and given the relationship between old crop corn prices and new crop wheat prices, that's going to be adding a little strength to basis out there. And it might help hold the lows for this wheat crop right now, the fact that we've got an additional buyer in that market. Normally we don't see a lot of upside at harvest, but it does look like this market is at least holding its own. There might be even more upside if the yields turn out poorer than we expect as we come on into Kansas. Obviously, as Kansas goes, so go the hard red winter wheat prices anyways.
Well, thanks, Paul. I'm headed back home to Wisconsin, where we'll get ready to report on next Friday's USDA data for the next edition of The Buzz.
We'll have to have more margin now, there isn't any doubt. So you better dash with a load of cash or we'll have to sell you out.